What is up, everybody? Welcome back. Thank you for joining me today. If you are new to the channel, new to the Strat, then welcome to you guys as well. I'm glad to have you guys here. Today we're going through the watch list for Monday, October 17th. We're going to rock through this. We've got a ton of plays on the list today, and a bunch of them basically have the same setups. So we'll go through them. We'll show you guys where you can trigger, where you can set your targets, and how to get in and how to get out of these trades. And listen, guys, if you're struggling with your trading, if you're struggling with this strategy, if you're looking for more consistency, this channel and what we teach here is going to help you get there. And I'm going to tell you right now, if you can dedicate yourself to 6 months to a year of this stuff, you're going to perfect your craft. You're going to perfect how to use this strategy, and you will become a more consistent, more profitable trader. I'm not saying it's going to take that long for everybody, but study this stuff, be diligent with it in what you're doing and what you're learning, and every day taking a look at it and back testing and trying it out, and you will get to that point. It's inevitable. The more you do something, the better you are going to get at it. It's just like reading a book, or learning how to write, or learning how to read, or learning how to do math, or learning how to walk. It's all the same thing. The more you do it, the better you become at it, and you're just going to become natural at doing it. So I want to go through a couple things before we get started with this watch list for Monday. The first thing, the platform that you see in front of you guys, this screen that you see is called TradingView. So it's a website. They have a subscription-based service. I've given you guys an opportunity down below. If you go into the description, there's a link, a TradingView link down below. That will give you a free 30-day trial to one of the paid services that TradingView provides. So you can go down, click that link, get your free 30-day trial to one of their subscription services. And if you decide to use it, you'll get up to $30 off of that subscription. But you need to start by going down below and clicking on that link. So go ahead and go do that, whether it's now or after the video, but go get your free 30-day trial for TradingView. I'm on Twitter. You can find me there at Mr. Clark Griswold. I also have a trading Discord. It's called Griswold Trading. That link is also in the description below. So everything that I offer to you guys for free or fee-based is in that Discord. So there's a ton of free rooms in there for you guys. There's also some private rooms. Those are for the Griswold Gold members. Now, the Griswold Gold membership is $50 a month. You get one-on-ones with myself with that membership. You get group sessions with everybody within that membership. We do Google Meets together to talk and answer questions. There is a live trading bot room where you get live trade setups. There's one for stocks and there's one for just SPY. So there's two of those rooms. You get access to the Griswold Strat indicator, which you cannot find on TradingView, but you can find it in a link down below. And you can buy those trading bots and the indicator separately, but they're also part of that really great offer for the $50 per month. And whether it's a one-on-ones, the indicator, the live trading bot rooms, you buy those separately, they're way more expensive than just the group offer. The membership offer. So there's ad-free YouTube videos in there. I send out top 5 plays, and you basically have access to me whenever you need it. So go check out that deal. There's a 2-for-1 month as well. You buy 2, you get the 3rd month free. So go check that out in the Discord. And like I said, all the information you guys need for what I offer is in that Discord. Let's get started on this list because, like I said, it is pretty extensive for Monday. There's a lot of setups, and a lot of them are the same. So we're going to go through and talk about that a little bit. So the first one on the list, and SPY sets this up basically for the rest of the tickers. So SPY's got this 2 up that finished red. So we are going to look when we have these 2 up. So a 2 candle, this is a directional candle. You can either have a 2 up, which means we only broke the high of the previous candle, like you see here, or there's a 2 down, like this scenario, where we only broke the bottom of the previous candle. So when we have a 2 up and it finishes red, not green, it gives us a higher probability that this trade is going to work out. And the reason I say probability is because all trades and all strategies are based off of probability. And when you look at a trade, you look at a candlestick, you look at a strategy, everything is is probability, that we're taking the probability of something going to happen because of what has happened. And that's all we're doing as traders, and we're taking high probability trades. And when there's probability, there's risk. So there's risk and there's probability in every single trade and every single strategy. So SPY's got this 2 up, finished red. We're going to look for puts because having the 2 up red gives me a higher probability, higher conviction that this trade is going to continue down. So we can look for puts at 356.96, and then the first targets have really great magnitude to 348.11. Now, when I'm taking puts on this, a lot of people ask me what's my strike price. So I will take 356 would be my strike price on this trade. I take the closest strike out of the trigger price. So 356.96. Even if this was 356.50, I'd still be taking 356. And then expiry date, I take closest expiry. So SPY would be Monday. Other setups, that will be Friday. The other thing we have is full time frame continuity. Now, I'd like to point out that the hourly, the daily, and the weekly are going to quite possibly be something new when we open up. Because if we trend up on SPY, then this hourly, this daily, and this weekly are all going to be green. But the last 3, the month, the quarterly, and the yearly, are going to be red. So when I take trades, I like for sure, and these are day trades, I like for sure to see the hourly and the daily in the same direction. Anything else, the weekly, the monthly, the quarterly, and the yearly, that's all bonus, meaning it just gives me a higher probability that this trade is going to work out to, as we're looking at it now, to the downside. And then this indicator that you guys see here, these time frames here, that's part of the Griswold Strat indicator, as is the inside bars and the outside bars being painted different colors, the candlestick numbers, and a few other things that are included with it. But it's an all-in-one stop shop. Puts all the indicators together in one indicator, so you're not having multiple indicators to deal with. So that's the play on SPY. Okay, we'll move on to Lift. So Lift, again, you can see we've got the same setup. We've got this 2 up that finished red. We're going to look for puts at 11.74 and first targets at 11.21. And again, you see that time frame continuity all to the downside. Now again, we can trend up on Monday, and the hourly, the daily, and the weekly will be green because Monday is a new week, it's a new day, and it's a new hourly. So these may change to green on Monday if we trend up, but if we trend down, we've got full time frame continuity to the downside on Lift. Next up, we've got CCL, Carnival Cruise Lines. So CCL has a 2 up that finished red, preceded by an inside bar. So in the world of the Strat, we call this a Rev Strat, a 1-2-2 reversal. And realistically, it is just a 2-2 reversal, but it is a 1-2-2. So we're looking for puts again at 7.01, first targets at 6.85. And again, you see the hourly, everything's red and outside of this week, but those are going to change again. So if we trend down, we're going to have full time frame continuity to the downside. So what this is telling me, and this isn't going to happen on every stock, and we might go green on Monday, but what's been shown to me, what I'm seeing on a lot of tickers, is that we're going to have a bearish day on Monday. Now, that may not happen, but that's what it's showing me, and probabilities tell me that's what's going to happen. So we'll move on to Plug, PLUG. Plug has an inside bar. So there's a lot of inside bars setups on here as well, or 3-1 setups, meaning an outside bar followed by an inside bar. And let's talk about the inside bars for a little bit, because those of you that know me and have been following me for a long time know a lot about the inside bars already. You know that I tell anybody who's new to trading or new to options, I focus on the inside bars, and I'll tell you guys that every time. Focus on because they're the easiest to find. It's the easiest to find. So an inside bar does not break the high, and it does not break the low of this previous candle. It stays within the range. It's a tightening range. It's a consolidation range. So we have a couple things with Plug Power on this one. So we have that inside bar. And so we're looking, when you see this yellow bar, and you'll see it if you have the Strat, or the Griswold Gold indicator, you'll notice that this inside bar, I want you guys to think of as a spring, and I want you guys to think of it as becoming spring-loaded and tightened and compacted. And when you let that thing go, almost like a jack-in-the-box, you're going to see the next candle explode to one direction or the other, and that's what That's what our hopes are. That's what probabilities tell us should happen. So it doesn't always happen, but I like to go over these and go back in time to show you guys. Like this inside bar we triggered and we didn't quite hit targets and it reversed. So would it have worked? Probably not. But on the second day, if you would have still been holding it, you would have had really, really great gains. So this inside bar, again, we triggered here to the bottom side and we hit targets. And that's exactly what the candlesticks said they were going to do. They said, if I trigger here, you can buy me and you can sell me when I hit targets. So if you did that and you followed that strategy, you would have had a successful trade off of that inside bar. We'll go look at one more. Here's another one, and it gapped. But you still had a nice 3-day run off of that inside bar. And maybe we'll find one more. Here's here's the example of one that worked out really, really well. So we have this inside bar, and it's telling a story like every single candlestick tells a story. You just have to learn and understand what that story is. So this inside bar was basically saying, and I know the colors aren't correct, but it's saying if this next candle after me, this candle right here, breaks above, you're going to buy me. And if I hit this first target, there's an opportunity for you to take profit. And then we would just have to go back in time and find the next targets and the next targets. But you look at the run off of this inside bar, 1, 2, 3, 4, 5 straight days of a run off of that inside bar. So if you held it longer than a day, you did very, very well. So that is the setup on plug and a setup on a lot of the tickers today that you're going to see as we go through this video a little bit longer. And guys, if you're enjoying this stuff, please give me a thumbs up down below. It helps with the algorithms. It helps to get this information out to even more people. And that's what the goal is here on this channel, is to help as many people as we can. And I don't want you guys to look for callouts from me all the time. I want you guys to be able to look at this stuff and have your own callouts and be able to find your own trades and your own way to trade it and make your own money and not relying on somebody else to say, hey, you should buy this or you should buy that. I want you guys to be able to make that determination to say, yes, I should be buying this. This is a setup. Did Clark have that one? Yes, he did. I feel like I'm on the right track. I want you guys to be able, that's what I want you guys to be able to do. So if we look at plug power, we can take puts at 1788, calls at 1929, and we've got our targets marked out accordingly. I'm going to put one more target up there for you. But based on time frame continuity, and we have a shooter candle, meaning this big long wick with this body at the bottom, that's called a shooter candle or an inverse hammer. It's a bearish sign. So we have an inside bar and we have a bearish pattern. And this is also a actionable signal. So inside bars are actionable signals. Shooter candles or inverse hammers are actionable signals, and hammers, which if this candle was just reversed with the body up top and the wick down below, that's the third actionable signal. So right now we've got a shooter and an inside bar. This is telling me that there's a high probability that this thing is going to trend down on Monday. So again, guys, if you find this video helpful and the information that we're putting out on these videos helpful, please give me a thumbs up and help the algorithms, and comment down below if it's helping you out, okay? Thank you. Next up, we've got Apple, and again, very similar to SPY. We had that 2 up, finished red. We're going to look for puts at 138.19, and our first targets are at 134.37. This purple line is for us to go 2 down on the 3-month chart, which we've already done on Friday. Okay, so we'll look for a continuation on that. We can move on to Amazon. Same thing, same setup. 2 up, finished red, puts at 106.60. First targets marked out for you. Keurig Dr. Pepper, same setup. I said there was a lot of tickers. You can go on almost any ticker and see this 2 up red. Okay, almost any of them. Now the time frame on Keurig is a little bit different than the other ones because we have that month, quarterly, and yearly all facing up. But for Monday, we're going to look for this to come trend down a bit. Puts at 37.11, first targets at 36.99. And the one thing I want to tell you guys, we're not front running this stuff ever. So I don't want you guys, if this was a Monday candle and it was closing and you're like, oh, it's a 2 up red, it's got to go down. I don't want you guys to buy puts before the market opens and we see that it actually triggers this line, because we need something to actually trigger before we get into the trade. We're not front running this stuff because of probabilities and because of risk. So yes, the probabilities tell us that this should trend down, but that's not necessarily what's going to happen. This could go on a great run tomorrow on Monday. Not saying that it will, not saying that it won't, but we need to wait for our play to trigger before we jump in. So puts at 1296, first targets way down here at 1218. A lot of these trades also have great magnitude, great profit targets. So meaning we have a big gap between here to fill. Not a gap, but a lot of room from our trigger to our target. And that's what we like to see. Next up, we're going to go to Airbnb. Same setup, okay? So we've got puts again on Airbnb at 109.01. AMC, 2 up, finish red, full time frame, puts at 595. Adobe, inside bar. This is actually one of those 3-1 setups. And you notice this gold bar, that's part of the indicator that I've created for you guys. Highlights those 3-1 setups. And we can go back in time and look at the last time Adobe had a 3-1 setup. And look at the run that this thing went on. I really like 3-1 setups. They tend to be very profitable. They're very rare. They don't happen very often. And they tend to, like I said, work out very well. So we triggered off of the top of this inside wick, and then we hit targets. And then this thing ran again for 1, 2, 3 straight days. We had a beautiful run up, and we hit targets all the way, and then it reversed back down. So that's how you can play those 3-1 setups. Basically just an inside bar setup, but when you put the outside bar in behind it, it becomes a very rare pattern and a really nice setup for us to trade off of. AMD, also a 3-1 setup, so exact same thing. So calls at 59.94, puts at 55.94, and we've got the targets marked out for you guys. Alibaba, or sorry, BA, Boeing Company, 2 up, finished red, puts at 131.37, good magnitude to the bottom. BAC is Bank of America, 2 up, finished red, shooter candle, so that's an actionable signal. We're going to look for puts at 31.57. Comcast, CMCSA, one of Rob Smith's favorite companies. He's just had issues with them in the past, so not an inside joke, but something he's talked about. Puts here on Comcast at $30.01. And again, really great magnitude back to the downside. Now, I'm not saying we hit these targets. So what you do, guys, don't just say, oh, I hit the trigger and it didn't hit the target and I lost money on the trade. We trigger and we target on one time frame. So when I'm showing you guys these, they're on the daily. These are our setups for the daily. We're triggering on the daily. We're targeting on the daily. But then we're going to hop down to a smaller time frame. Now, whether you trade off of the 30 or the 15 or the 5, it depends on your risk assessment and your risk management. That's how you would get out of a trade in case it doesn't hit these targets and it reverses a bit. Okay? You need to go look at any of my review videos. Any of the review videos that I do. I walk you guys through how to get in, how to get out, and how to manage trades. That's what we do here. I try and be as candid as I can. And clear, and I don't want to mislead you guys, so I try and, when I go through my videos, I try and show you exactly where you could have got out, and you might miss on gains. You really will. You're not going to call the tops on every trade. You're going to miss out on some gains, but as long as you're making that money consistently every day, then it shouldn't be a problem, okay? I don't care if you guys get 5% on a trade or 50% on a trade. A 5% win on a trade is still a 5% win. And it's not the wins, it's more of the losses, how you control that risk. So the smaller you can, and if it reverses on you, get out. Take the win or take the tiny loss, and that's it. And you move on to the next trade. And that's what becomes that's what makes people successful traders, is their risk management. And if they can just cut a trade, and it's emotion, and I know it's tough. And when I have my one-on-ones with people, that's the one thing that I really discuss with them, is the emotions of trading and the psychology of trading. And you have to train, you have to program your mind to really deal with that risk, and really just cutting a trade when it's not going your way. Even if it reverses and goes the opposite direction, you can get the next one, or you can get the next one, or you can get the next one. Okay. CRM is up next, 2 up red, puts at 142. CVX, inside bar on CVX. So puts at 159.93, and I didn't even put calls in here, but we're going to mark them out for you guys together. 165.46 on the calls, and then we'll mark out that first target for you guys as well there. And it looks like we have a setup on the weekly on CVX, so there will be a weekly video as well. But if we go to the weekly, we're looking for a 2 down on the week. So looks like our third target on the day is the break of the weekly. So we'll see how CVX plays out. DIA, same as everything else, 2 up red. We're going to look for puts at 269.19. Disney, 2 up red. Puts at 94.33. DocuSign, 2 up red. We'll change that green to yellow. And we've got puts at 43.95. And you notice the time frame again. EW, 2 up red. Time frame continuity. Puts at 81.85. Ford Motor Company, 3-1 setup. Okay, rare pattern, although there is one here. But even on this one, we gap down, so you would have missed the trigger on that. But another 3-1 setup here, and we also have a inside bar setup on the weekly for Ford. I know by those 2 pink lines. I also know because we have this yellow circle around the weekly arrow, which indicates to me that there's an inside bar. If it's a silver square, that indicates an outside bar. So double inside bar setups on Ford. We can take calls at 11.85. Our first target is the break for the weekly. So you can stay in this trade a little longer, possibly to change it into a weekly swing. Or puts at 11.56, and our second target is the trigger for the weekly to the downside to break out of that inside bar. Fubo, 3-1 setup. Okay, so puts at 380, calls at 427. GE, 2 up finish red. We're going to look for puts at 67.19. GME, inside bar. We're going to take calls at 26.37, puts at 24.63. Notice the time frame again. IBM, 2 up red, puts at 119.84. IWM, 2 up red, puts at 166.71. JP Morgan, 2 up red. We've got a gap to fill here. Shooter candle. It's an actionable signal. We're going to look for puts at 110.72. And normally, guys, I tell you to put the target at the bottom of a wick, but we have this gap here. And what I mean by that is there's no candle in that space there. Okay, there's no candle filling this space. So that's what we mean when we say gap. So we need to fill that gap. So when we have a gap, the target goes to the top of the candle, then the next target would go here to the bottom of the next preceding wick. Now, we don't take targets through candles. We just take the next one and the next one and the next one. And I'll try and find a better example to go through that with you guys. So Coca-Cola, 2 up red. We're going to take puts at 54.94. There's our first target there at 54.26. MS, Morgan Stanley, 3-1 setup for Morgan Stanley. We can take calls at 79.06, puts at 74.83. Mr. Softy, that's Microsoft, 2 up red. I'm going to move this down just slightly. There we go. 228.34 are the puts on Microsoft. Then we head up to MU, 3-1 setup, calls at 55.44, puts at 52.60. Netflix, 2 up red. So here's the thing that I was talking about. So this is our first target. Way, way down there. It's great magnitude. What we don't do is we don't put our targets like that or like that. Okay, they don't go through the candles. They go to the next preceding wick. Okay, so if we have to go back in time, we would just, not that one, just like this. Okay, the next preceding wick right there. And then the next one would be down here. We don't cut through candles. Okay, we just take the next lowest preceding wick. Nike is up next. Nike with that 2 up red that we're seeing everywhere. It's also got an inside bar on the weekly. You'll see that on the weekly swing video. Okay, so 2 up red, we're looking for puts at 87.55. Our third target to the downside is the trigger for the weekly. 2 up red on QQQ, puts at 260.14. PayPal, 2 up red. And guys, let me tell you, there are a lot of plays I didn't put on here. So you can go, I've got that video that has the list of 100 plus tickers that I go through. The majority of them have setups like this. Okay, so you can go through that list and mark them out and look at what you guys want to play. And also for the Griswold Gold members and anybody who wants to join that, there will be top 5 plays for both the swings and the daily trades in there. Okay. Puts at $80.29. First target's marked out. Twitter's got this tiny little inside bar. It's a tight inside bar. It's what we like to see with inside bars. I like to see them tight like that. Again, the smaller the bar, the bigger the move is likely going to be. Not always, but probabilities, guys, right? So calls at 50.87. Our first target, because if we go to the weekly, those 2 pink lines tells me there's an inside bar on Twitter on the weekly as well. So we trigger off of this inside bar with calls. Our first target is the trigger for the weekly to go 2 up. Okay, if we trigger to the downside with puts at 50.30, our second target, but they're pretty darn close, 2 pennies away. So the next target to the downside is triggering Twitter to go 2 down on the week. Okay, so pay attention to Twitter. Two very good setups on the daily and the weekly, both inside bars. XOM has an inside bar, so we can look for puts at 99.04, or we can look for calls at, let me change that to yellow, calls at 102.24, and then you notice the 2 pink lines again, and this little yellow circle. We have an inside bar on the weekly, so pay attention to XOM. Trigger on the weekly, or trigger on the daily, and we'll trigger on the weekly, most likely. Okay, we move on to XOP, very similar, inside bar on the weekly as well. That's gas for you this week. Okay, so calls at 145.31, puts at 137.28. You guys can mark out your targets as you see here. But again, we trigger to the upside. First target triggers 2 up on the week. Second target to the downside off of the daily is our trigger for the weekly to go 2 down. INTC, 3-1 setup. We can look for calls at 26.63, puts at 25.76. 2 up red on Oracle, inside bar as well on the weekly. We'll go through that on the swing plays, but puts at 64.21. What do we have here? 2 up red on Starbucks. So Starbucks has that 2 up red. We can look for puts at 86.24. We also, again, if we go to the weekly, we've got that inside bar set up on the weekly. So if we trigger the daily, it's very possible we trigger the weekly on Starbucks as well. So again, guys, you can follow me on Twitter. Make sure you give me a thumbs up if you like these videos. If I've helped you in any way, make sure you're giving me a comment down below. Let me know if I've helped you in any way. And I am going to do a giveaway, I think, on the weekly swing. So make sure you guys are checking out that video as well. And at the end of this video, on the bottom right, there's a learning playlist tool for you guys to help you become more profitable, more consistent. Beyonce's there. She'll point you in the right direction. And then go to the top right as well for our SPY trades on how we trade SPY every single day for profit. That's the video, guys. Thank you for joining me. Good luck trading Monday. I wish you nothing but the best, and we will see you all on the next one. Goodbye.